Yeah, good morning. Good morning, everyone. Thank you for coming, for being here in my living room, Borussia Dortmund. I'm often here. And I'm excited. I'm Daniel, member of the board of the Bundesblock and CEO of XIONI. And today we will focus on what's really deployed in enterprises, what delivers value, and what needs to change for broader adoption. I'm delighted to welcome Anthony Day, Marketing Director at VeChain and host of Blockchain Won't Save the World.
It won't.
It won't. Give a warm applause, please. And Wolfgang Prinz, Professor Wolfgang Prinz, Vice Chair Fraunhofer FIT, Professor of WTH Aachen, and leading the Blockchain Real Level for SMEs. And Dr. Damir,
Vodenicarevic.
thank you. Co-founder of Massa Labs, building privacy tech and CONF3RENCE for Web3 ready core banking. And last but not least, Ada Ladyshenski.
Yeah, it's fine.
Right. Yeah,
Lady and Shensky.
right. Partner at Page Executive, specializing in C-level hiring for tech and blockchain. Okay, warm applause, please. Quick ground rules. Please make it short and punchy answers. Healthy disagreement is welcome, guys.
I disagree.
And audience, please, get your questions ready. We'll leave it at the end. So let's dive in. Anthony, please, name, role, and one enterprise use case you've seen succeed beyond financializing everything. What business outcome moved the needle?
Good morning, everybody. Anthony Day, I'm the Marketing Director at VeChain. What we've been focused on for the longest time is real-world adoption. Started in B2B. So for the longest time, we were talking about shared ledgers. We were talking about tokenizing everything, albeit somewhat blocked by regulation. And where I think we are now is we're actually seeing B2C use cases be successful. In our case, it's around tokenizing real-world actions of customers or individuals. In our case, focused around sustainable actions, so making improvements for yourself, for your community, or for the planet. And so being able to use tokenization of activity to verify that something has happened, being able to reward people in a cryptocurrency that can move, that can be verified, that can be traded very easily, being able to use a DAO structure to be able to bootstrap founders and projects that are producing apps and to be able to support them with grants and funding. This is the use case that's been very successful in our world for the last 12 months and beyond. We've seen about $10 million of funding go to builders through vbetter.com. And that, to me, is actual use of multiple crypto primitives. That's the important difference, is rather than saying, we're going to put things on a shared ledger, or we're going to tokenize something, individual one capability at a time, being able to pull together multiple crypto primitives is the point where we actually get to real usable functional applications. We'll talk about AI later. And why is that meaningful? Is because from a business perspective, you've got verifiable tokens of human action. Real world actions, not real world assets, are a different way of looking at RWA. You can then put that on the balance sheet. Those human actions from your customers or from those that could be fans, if you're a sports organization, that can be tokenized. That can be financialized, and you can incentivize human actions between purchases or between games, whatever you choose it to be. That's a very powerful way of thinking about crypto today.
Thank you, Anthony. Wolfgang, name, role, and one thing that changed in the last year that actually improved adoption, and what's still missing.
Yeah, I think we are now in the whole Web3 and blockchain business since 7 years at Fraunhofer, where we founded the Fraunhofer Blockchain Lab. And since 4 years, we are running the Blockchain Real Labor near Cologne, where we try to interact with SMEs. So we really try to get into the standard business with blockchain-based applications. And it's not that easy. Yeah, so people often don't understand it. You often still hear, well, I don't understand how a blockchain works. And then I always ask, but you use LLMs. Did you ever understood how an LLM works? And so that's one thing that now AI is taking over. The other thing is that actually there was a lot of discussion previously about the transaction costs. about the usability of blockchains and things like that. And that changed over the past years. Transaction costs, nobody is talking about anymore. You can deploy activities, smart contracts without major costs. Usability improved a little bit. It's still a problem with the whole wallet kind of thing, that people don't understand what a wallet is. So we are not talking about this community here, yeah? We are talking about the people out in the business, yeah? And you explain them that they first have to install a wallet. So we try to develop, in the end, really blockchain applications where you don't see the blockchain at all. We just promise some of the basic stuff, decentralization, which is at the moment really important. Yeah? People talk about decentralization because they're afraid of the centralization issues, in particular what's sometimes going on in the United States. And these things have changed. Yeah? And for us, it has changed that we are less talking about blockchain functionalities. We are talking about the promises of security, decentralization, easy to use, low costs. And also, we are no longer talking about energy consumption. Nobody's asking any more about energy consumption. That's also something that AI has taken over, yeah, from blockchain. A lot of other attention also. And on the other hand, also AI, on the one hand, it was something that took over a lot of attention, but now it's bringing back attention because now people want to think about authenticity of data, about agents and the authorization, bill of attorney for agents and things like that. And from that point of view, Web3 is somehow coming back. So to sum up, it's basically reduction of transaction costs, better usability, and make blockchain invisible in a legacy application so that you don't talk about proof of work and things like that.
Great, thank you, Wolfgang. Just try to debate with AI and power consumption. I think you will not win. So I think that's why it takes over. Damir, thank you, Wolfgang. Damir, name, role, and one problem that cannot be solved without blockchain, and why not Web 2.0?
Well, I'm Damir, Vodenicarevic. It's a long one. So initially, I did research. I'm a researcher in physics. I was using physics to accelerate machine learning on chip. That was my first thing. Then I started working in banking, where I worked for Treaser. It's one of the leading fintechs in France. And there, I contributed to building from scratch their core banking system. So I saw what's good, what's not there. And then, as a follow-up, I started in 2020 my own company with some partners, which is Massa Labs. And there, our goal was to build the first blockchain that's fully decentralized. It's kind of weird to say, but
why not Web 2.0?
Why not Web 2.0?
Yeah.
Basically, Web 2.0 doesn't solve one thing, which is decentralization.
Okay.
And for us, building something that's not decentralized and using a blockchain for that doesn't make any sense. And we felt that over time, people lost track of why the blockchain exists. It became a buzzword. It became a way to temporarily avoid regulations. But we want to switch from that, and we want to build, at the same time, two things: a blockchain that's truly decentralized, back to the roots. So that's Massa Labs. And on the other side, I started XIONI recently. And this company's goal is to build a core banking that's AI ready for the future agentic world, and ready for also working with blockchain, because nowadays it's not very well integrated.
Thank you, Damir. Anna, name, role, and one skill enterprises consistently lack for blockchain initiatives in 2022, with 5.
Yeah, could you start the beginning of the question again?
Name, role, and one skill enterprises lack.
Okay, so basically it's really understanding of, or the why this could be better. I think that's, so I agree with what you said previously. Why do we actually need it? Why does it make things better? People really think, yeah, there's some fancy buzzword, but why could it really improve to have things decentralized? Why it could enable trust? That's definitely, and I think when the why is missing, then everything else is kind of a problem too.
Okay, thank you, Anna. Wolfgang, did we focus too much on the blockchain tech itself instead of making it disappear in the stack?
I think so. That's something I mentioned already in my previous introduction. Basically, when we started the blockchain Reallabor, we had a lot of people coming and they really wanted to understand how blockchain actually works. And that is what we explained. And we do it just to make a short announcements when there's a Web3 crash course just later on that we give. And there we do the same. And people really want to understand what it's all about and what is a Bitcoin and how is proof of work and why is it so energy intensive and things like that. And we probably focused less really on the why. Really on why do we need this and what are the potentials and what are the easy to use applications based on that. And that very often people really didn't understand. It was too much technology focus and a lot of things were completely overpromised. In Germany we said, well, you get rid about banks, you get rid about notaries and things like that. A famous politician recently said bullshit, yeah. So that's also some kind of bullshit. We overpromised it and there was too many expectations. So we have to lower it down and bring it to the basics. And now it's really something where you really have some kind of fire and forget, put your digital product pass, do real world assets, just put it on the chain for less than 1 cent. And then you start up building an ecosystem. And that is something that is missing, that a lot of companies understand that you have to build an ecosystem in the cooperation with others. And very often see just for their own business. And that often fails then to work just with a business, with a blockchain application.
Speaking of which, would stablecoins help as enterprise rails or still too fragile regulatory-wise?
I think it's something that we, normally when I give presentations in our Real Labor, I very often have the slide of the Genius Act. And I said that changed a lot. Stablecoins change a lot because it now means that within a smart contracts, within 2 lines of code, you can transfer money without any trouble of exchange rates or things like that. You can more or less really transfer somehow almost real money. And unfortunately, at the moment, it's most US stable coins, but there is now a Euro stable coin just recently launched, which is BaFin approved, which is really a great step forward. And I think as soon as we have an easy to trade and cheap to get, it's still on the Ethereum chain, cheap to get Euro stable coin, it will change a lot because then companies really seen that within 2 lines of code, you make transactions.
Mm-hmm. Thank you, Wolfgang. Anthony. I think I just have one question for you, and you have got a lot of time.
Just one.
Yeah, just one. What's the smartest combo of blockchain, blockchain AI, blockchain IoT, blockchain AI and IoT, and mobile as an addition?
I love this question because we went through, blockchain is the best technology, it does everything. And Wolfgang very nicely took us through the iteration of, well, Bitcoin proved ledgers, Ethereum proved tokens, but we were trying to use each one at a time. And so, okay, we've got a shared ledger. Well, we'll go chase after shared ledgers as a use case. And everyone's like, well, that's just a different version of cloud, right? It's like, yes, correct. Moving the data somewhere else does not create transformation. Okay, tokenize everything. Ethereum, let's do that. We tokenize things. Okay, well, where am I using these tokens? Where, how do I trade them? What workflow am I putting these into? We haven't done anything with that yet. So we tokenized CryptoKitties. We created gaming things. We said we were going to tokenize intellectual property. We did. But we never integrated it into any useful workflow or application that anybody could actually meaningfully engage with. And then we went into decentralized finance, and in the finance world, using tokens makes a whole bunch of sense. 24/7 automated markets where you can initiate trades anytime, instantly, globally. That's really useful, right? And so, but we didn't have the regulation to support that. And so the finance world was building things but couldn't actually launch them until now. Or until recently. Obviously Switzerland, UAE, Singapore, Hong Kong have been doing much more for the longest time. But here in Europe, we kind of look at it as like, not yet. Each one of these is one capability at a time. And the 10 types of innovation will tell you the more technology capabilities you use together, the more powerful or the more differentiated or the more useful an application. And so rather than thinking about things we build in features or primitives of blockchain technology, as I've described, actually let's use them all for something, right? So a ledger for verification, a token to be able to represent an action, cryptocurrency to represent value that can then be traded and moved, a DAO structure to be able to create voting automation, to be able to create governance around an application. This is what we're doing with VBeta. Anybody wants to go check it out, go to vbeta.com. Why AI is because actually AIs make applications better. The blockchain doesn't do that. The blockchain primitives are useful for value, tokenization, and identifying activity and automation behind it. The other stuff is what makes apps useful. I'll give you an example, mugshot. I take a picture of a coffee cup, that I'm using that has a reusable mug, and I get rewarded in crypto for doing so. The blockchain doesn't verify that my coffee mug isn't made of paper or plastic. The AI does. That's a feature in an application that you need not blockchain technology to build. And so we lose, because we're spending so much time thinking about the blockchain stuff, we lose the visibility of the actual applications that we're trying to build. And we're like, well, actually, no, you could use AI for that. You could use a model to be able to train what is a reusable and non-reusable coffee cup. We use AI and blockchain at the application level, and we're using that today on applications that millions of users are using for real. That's blockchain and AI. It's not complicated, agentic, automated, machine-to-machine stuff. That's coming. But right now, today, we're using actual blockchain and AI for actual applications that normal humans can use. And we're afraid of blockchain being a competitor to AI. Bollocks. Sorry, excuse my language. Quatsch. We're doing it today, and it is possible. Bullshit, as politicians like to say.
Just an example, we recently developed an application where you just scan your receipt from a your shopping receipt, you scan it, it's automatically analyzed, it's estimated what's the footprint, the CO2 footprint of the things you bought, and you get tokens in reverse.
Love
it. It's a basic...
Come bring that to VBetter.
Yeah.
We would love to have that on VBetter. We'll talk after.
Yeah.
But
great.
It's all centralized, right?
The AI is centralized, the tokenization is decentralized. It's a combination of both. And I think that will be the future. We still have both.
But token emission requires trusting that central authority, right?
Yes.
Okay.
Speaking of which, convenience versus decentralization. Where do you draw the line for enterprise-grade systems today? So it comes in.
That's a very good question because, convenience was the main blocker for decentralization historically. I mean, look at the web, just the internet. Initially, it was built as a highly decentralized system by construction. And it evolved into a system where first, by convenience, people did not want to be their own access providers, so they paid for central access providers. Then suddenly, fiber optics were owned by a few entities, etc., etc. It's centralized. People now don't even need almost peer-to-peer communication between computers. They just use services like Facebook, Google, whatever. And these things has been lost for convenience because it's more convenient than managing your infrastructure. Very simple. So my scare is that blockchain might go the same way, which is it started decentralized, but then suddenly we sacrifice decentralization for speed, for ease of use. Not many people can handle their own private keys. What if you lose them? What happens? So I think we need to rethink that from scratch. We need to really try to push decentralization as much as possible. Keep people in control of their funds, of their concepts, but allow that to be convenient. And that's extremely hard.
I will say yes and on this one, because I think decentralization is a spectrum. As is all for any technology that you build, any platform you build has trade-offs. And there will be different levels of acceptance, different levels of regulatory requirements. There will absolutely be cases where you must have self-sovereign, user-controlled, private things. I've worked with ZK technology for the zero knowledge for the last 2 or 3 years, and we were building with Midnight the most private. Data remains on the client side, everything secure, in your own box, controlled as much as possible. But it's slow, it's expensive. Regulators will not accept the black box, and so we have trusted execution environments like Secret Network. Go talk to Megan. You have multi-party computation, which the data leaves the system, it's fragmented and sent to multiple providers, which makes the proving faster, but it means the data leaves the system, so it's less secure. In every one of these design choices, you have a trade-off. And enterprises will make trade-offs because in some cases they have insurance, right? If it breaks, we'll pay you out, right? We don't necessarily have to be at the maximal end of every technology choice all of the time. And I think some of the challenges we have with Web3 is we've been too decentralization maximalist too much of the time and not been ready to make trade-offs in the things that we build. There is a place for everything you're doing, and you will find that product market fit regularly. My observation is don't try to fit that thinking into every use case because at least in enterprise and B2B, there will always be trade-offs.
And what is the biggest ops friction for you?
Initially, it was...
You would fix first, obviously.
Yeah, Anna made a kind of an interesting observation at the beginning of what's missing in enterprises. First thing for me as an open mind is to actually objectively assess technology, Web3 technology, on the primitives, the capabilities it can build. So quickly people come and say with bias, oh, well, that didn't work over here, so I'm just dismissing it forever. Open mind is thing one. Thing two is finance transformation. Just go to any finance team and say, what happens if I give you a crypto wallet, a multi-sig, and a requirement to manage digital assets that have to go multiple currencies across the board? You said that we need to have digital euro stablecoin. We can have a DEX that very quickly moves things to different assets in the background, automated without any human having to touch it. That's not a blocker for me. But in the mind of Europeans, it's like, well, if it's not in the euro, then I can't use it because my finance team won't like it. Mm-hmm. Finance transformation. There you go, bold prediction. Finance transformation is the biggest ops blocker to Web3 adoption.
Okay. That's a statement.
You didn't expect that one, right?
No, not really. Damir,
Yes.
what exactly prevents then interoperability between Web3 and bank accounts today? Standards, PSD level rails, custody UX, compliance, orchestration. What's your pragmatic path to tap this to settle?
Yeah, it's true that in blockchain we often spit at banks. We're going to replace banks. We're going to kill them. But why? Because we don't like the way they work. They're outdated. They have a lot of issues to evolve. They're not built in a modular way. And this is exactly what currently we're building XIONI. The goal here is to take all the teachings, what we have, and build a core banking, so the technological side of things, from scratch today, as if we were building it with the current knowledge, not outdated technologies. So we want a core banking that would be basically AI ready. You can have literally an agent control your bank account, which is currently close to impossible. You can have interaction with the blockchain. I mean, very simple things. How do you prove to a third party that you have done a transaction today? It's very sloppy. You need to send a PDF and they kind of have to trust it. What about agents? What about smart contracts? You need to have that integrated inside the core of the bank, the core banking, to enable all these applications that are currently impossible. So my goal here is to try to figure out ways to have a whole core banking system that exploits all the new possibilities offered by law, because we often speak at the law, but actually the PSD2 law is quite wide and quite open, but completely underexploited by banks today. We want to build something that's maximally exploiting this so that we can use all the possibilities offered. And actually, it's not that bad. We can actually build it today.
Okay. Dive into the focus of SMEs, Wolfgang, back from the scope of banking. If blockchain becomes invisible support tech, as we discussed further, what integration patterns, APIs, data models, middlewares, do the SME needs? Where should AI be embedded to help? And of course, blockchain.
I think what they need as API is similar APIs than all the APIs they have with all the other systems. Yeah? I mean, currently they use for AI, they use the OpenAI API. They know how to do that. They need the same thing for blockchain-based applications, for Web3-based applications. Create an NFT, create a token, prove something. So, but all of that exists already. Yeah, and thanks to AI, it's easy to develop a Python program to do that. On the other hand, yeah, so AI helps there to adopt that. So I think it's really something to level to bring it to an API level that things can be easily used, and then on the other hand, include some paymaster that they don't have to get some cryptocurrencies at the beginning, so that they probably just can do something. So that they have a quick start.
Get the APIs ready for the agents?
For the agents also, yeah. Get the API ready for the agents so that they can use it.
Mm.
Yeah? Okay. And I think Fetch AI is doing something in this direction.
Okay, guys. In the enterprise stack, where must decentralization be non-negotiable and where can we safely optimize for convenience? Fire away.
Wherever it's needed most. Honestly, as I said before, there are parts of every enterprise stack where you will have credential issuers that either must be regulated or trusted or that have to have KYC or something like that, that you will struggle to decentralize in the traditional regulated industry spectrum. That's constraints that you will never get away with until you change regulation. And whether we like it or not, transformation of regulators is the hardest version, right? Healthcare, that's super hard. traditional industry in Germany, that's even harder, but transforming industry to accept decentralized credentials or decentralized data or zero knowledge, black box technology, this is super hard. And so whether you like it or not, if you actually want to adopt real world assets or tokenization of real world assets or human actions or real estate or intellectual property in workflows that exist in regulated industries today, whether you like it or not, you will not be able to have fully decentralized, fully on-chain capability because you will not get that through business process change. That sucks, right? In the meantime, we can create shadow industries or we can create decentralized finance that operates in a vacuum, in its own world. And that's fine, and that helps to prove the point. But until we transform the rest, it's going to be very hard to get there.
Great, thank you. Switching gears, Anna. Talent, careers, operating models. When we say enterprise blockchain, do we mean permissioned private systems or enterprise using public chains for specific functions? And how do career paths differ?
Yeah, so basically, if we talk about enterprise blockchain, it could be, for instance, IBM and the big corporates that we talk about who have their own, yeah, exactly. Anyway, just IBM.
Former IBM, shout out IBM.
Exactly. So basically, it could be that you work for a corporate on blockchain, but from the corporate eye, with private blockchains for their use, or maybe in a consortium like Aura, for instance, which is the luxury consortium between different luxury brands who use together, but not in a completely open setting, something similar to Ethereum to prove like where clothes come from, authenticity, etc. So that could be one thing that we mean with it. The other thing would be, for instance, public chains like Ethereum wanting to be adopted by enterprises or for part of the processes, and there could be enterprise-related careers. So basically you work for Ethereum Foundation, Solana Foundation, or maybe some other player in the Web3 native space, but you work on enterprise specifically. How can we get institutions in? How can we get corporates in? I think Polygon 3-4 years ago was very big on that when it came to partnerships with Starbucks and the likes. So basically, those are the two differences that I see when we talk about enterprise careers. And in what way do they differ? I think very often they start similarly, because often these people, similar to Anthony, start actually in consulting. For instance, at Deloitte, EY, it doesn't have to be like that, but a lot of great careers, whether in enterprise or Web3 native, have started in a consulting setting, which makes sense because they see a lot of different projects, a lot of different use cases, and then they're also not limited to one, because if you directly go into one niche, like luxury goods, for instance, yeah, then it's maybe harder to transfer somewhere else in Web3. But if you keep it open from a consulting point of view, then of course you still have it open after 3-4 years to decide, okay, what interests me more, which use case do I want to focus on? And then you either stay in the corporate world or you jump into Web3 native. And I think, so the start is similar, but then it goes different ways, because once you go Web3 native, you have definitely a different career.
There's no going back.
So it's no crossover successfully now?
There are crossovers and more, but I think there's still more crossover from traditional to Web3 than from Web3 to traditional. It happens because more traditionals are now interested in, okay, what can we actually, how can we actually get the Web3 native people in who give us insights about how this works? But it's still limited, because Web3 natives often are used to 100% remote settings. They want to work decentralized, anti-hierarchical, and while most corporates live in a centralized hierarchical system, that's what makes them work. And you have to decide for yourself what works for you.
Okay. What do you think is a top skill in this year for hiring?
I think top skills are definitely business development at this intersection of institutional and Web3, and to understand both sides. That's definitely a top skill. But otherwise, any skill is a top skill that you want to specialize on, because it doesn't matter if a lot of people look for BDs now. If that's not your interest, it doesn't help you. So if you're into compliance, that can be your top skill still. And if you're a top tech leader, that should be your skill. So it should be more about what you personally want, because even if it's a niche, well, you might have just 2-3 companies you can work for, but this is really you and what you want to do, because otherwise, yeah, if you just chase what is hip or what is good now, that can change, particularly in Web3, very fast. I mean, I'm sure we all remember the gaming hype a couple of years ago, so everybody wanted to do something related to gaming. But yeah, 2-3 years later, stablecoin is really the go-to thing. And if you switch all the time, and actually that's a red flag that I see with projects or CVs, if I see somebody just jumps from, oh yeah, now I'm stablecoin because stablecoin is hot now. Okay, then I know they are not really about stablecoins. It's more about what is hip now.
Oh, thank you. And thank you that you answered my second question with the red flags. So chasing the waves is not good behavior.
I mean, you can do it and you can be successful with it, but I personally believe that you will just get so, because the waves change a lot, at least in Web3 native. In corporate life, it's much slower, much smoother, but in Web3, the waves come and go so fast that you're not even done building one thing, and then you jump into the next, and you end up doing nothing.
I think it's a bit like saying, okay, I'm going to be a go-to-market leader for Mercedes-Benz, and then I'm suddenly going to go and become a go-to-market leader for Merck or for Johnson & Johnson. It's very hard to be an industry go-to-market leader in very different sectors. What I would say is somebody who's hired tens, if not maybe 100 people in Web3 over 8 years, the technical knowledge is the one thing that you cannot compromise on. And that doesn't mean that you have to be a developer, but actually an appreciation of how technology is built, how the different components of the Web3 stack work in Web3, actually understanding wallets, exchanges, tokens, to some degree compliance, to some degree regulation, and then also how that technology is applied in practice. Whether you're an engineer or not, you will not be successful in any protocol or any Web3 native business unless you actually have practical, hands-on understanding of how the technology works.
Yeah.
Consulting about what Web3 could do today in 2025 will not, unfortunately, let you in. And that's experience that if there are people in the audience who are looking to work in Web3 who are not already, that's the one piece of advice I give everybody is you cannot consult your way into Web3 now. You have to be actually using it, feeling it, and have an opinion on it.
Yeah, actually, I would maybe to add to that, I think in a corporate setting, you could still, because what corporates often do is that they take the people they already have in their company and then give them these blockchain roles. Like fewer corporates actually hire externally for blockchain. They take the people they know already who fit the culture and who maybe got their hands up and said, I want to do this. So there, maybe it's still possible or easier, but in Web3 native, I absolutely agree with Anthony because, if you didn't get your hands on the topics, there's also so much competition because maybe that's also different. If you apply for a corporate blockchain career in your country, usually, you do have some competition, but it's not that much, especially if the role is internally just, announced. But in Web3 native, you have the competition from the whole globe. And so you can't really, if you have not done anything practically, maybe try to get into a project, get some project work, maybe even for free in the beginning, just to get your name out there and or do some, work there.
Great, thank you so much. Any questions from the audience for the participants? Yeah, please. Do we have a mic?
Work? Okay.
So your name first, please, and then
Yeah. My name is Sabo Chugray. I'm from the PVC network. I'm an intern. A little bit different division, but I'm interested in the blockchain technology. I would be ask you, Damir, what do you think? Can this kind of decentralized finance ever provide the same stability as the classical bankings, and how would the big banks somehow accept this kind of system, or would they integrate or compete with it, and why would they let it out of control, this kind of whole financing thing? That's for me is a big question. Thank you.
Thank you so much. Damir?
Yeah, it's
60 seconds.
It's a very interesting one. So first of all, I don't think it makes sense for a bank to just adopt the blockchain as it is. It makes sense when they need to reduce infrastructure costs. For example, they want to avoid having to maintain all these high security systems for some specific applications. Or they want less administrative burden, typically less regulatory burden, let's say stable coins. They can, like some fintechs can just avoid completely the whole hassle of being an EMI, for example, just by adopting stable coins. But that's a temporary regulatory hole. Everything is converging, so soon it's going to be all the same laws governing everything, ideally. So this is a temporary thing. So for me, the only case where for a bank it makes sense to adopt the blockchain is reduction of infrastructure costs right now. And to tap into maybe the Web3 market if they want, because there's money there. But otherwise, it doesn't make much sense for them to go there.
10 seconds on that one. Banks are already deploying DeFi products. If you look at Franklin Templeton and Benji, that is already a yield-bearing peer-to-peer payments token that exists on blockchain-ish rails. That cat is out of the bag now. That's not going away. Banks are deploying DeFi solutions today, cross-border, tokenized cash products. The easiest one to build because it's the least complicated. Citibank already have that and have deployed it. It's not when, it's now, and it's only going to get bigger.
Great, thank you so much. So I wrap this up. Thank you. Thank you, Anthony, Wolfgang, Damir, and Anna, and all of you guys. Please grab the panelists afterwards if you have any questions. And don't forget to tag the conference in your LinkedIn posts, of course, and have a nice day. Thank you so much.